Hello and welcome to Proactive Investors TV. We're speaking with Dr. David Burton, the CEO and Chairman for Compumedics. Welcome, David.
Pleasure to be here, John.
First of all, can you outline the company's core businesses, along with the revenue generated to date during financial year 2016?
Yes, look, firstly, we have a medical diagnostic company, and we've got expertise in sleep, neurodiagnostics, and also Doppler brain blood flow. They're our three key areas. Our revenues for this year's guidance are 36 to 38 million, and last year we were 33.4 million. So we're seeing strong growth. In particular, we're seeing a strong demand for our products with 24% increase for orders on hand compared to the prior corresponding period. So strong business, good growth, and quite an interesting area of medical diagnostics with high barriers of market entry.
Can you expand on the recent contract wins and how they will impact future revenues?
Yes, look, in recent times we announced the winning of two sales, one in USA, Wisconsin, USA, which is a neurodiagnostic and sleep centre, one of the fine reference centres of USA, and similarly an Australian centre, Westmead Children's Hospital in Sydney, and once again one of the premier reference sites. So this provides a further foundation or blue chip foundation for the company to grow its sales moving forward, which we're very focused on.
Which are the key markets or regions that companies can grow in the short to medium term?
Well, we've got three target markets. Firstly, for the baseline, that's the world's largest device market in the world, is USA. So that's our primary focus. We have a centre there with marketing, sales, logistics, service. So we've got a situation where we can literally scale that up 2 to 3-fold, particularly based on an upcoming release this year of the first time we've tackled the mid-tier market with a much more competitive product. Then we have China, one of the greater growth markets for us, particularly relevant as being the only company of its kind in the Asia Pacific. And with China, you've got the middle class transitioning to move towards an expectation of more sophisticated diagnostics. And of course, treatment starts with accurate diagnostics. China, 200 reference centres with Compumedics, 2 decades of development, a very difficult market to get in. We're doing 8 million revenue in that country alone, and it's profitable revenue. So a good base, good transition to more growth. And then the third one, Germany. It's one of the world's largest device markets. We haven't had a base there or a headquarters, so we're going to replicate the model in USA and have a centre and infrastructure in Germany to far better support that market, and that's a good growth outlook for the company as well.
Can you please elaborate on the step-out growth opportunities for each of these businesses?
Yes, look, step-out growth opportunities are extraordinary at Compumedics. First, we've just described the core business, but in adjunct to that, we have, for example, recently announced the MEG imaging business. This takes Compumedics into a neurofunctional imaging domain using the most sophisticated imaging technology. In fact, it's 50% more sensitive than the incumbent market leaders. It puts us into the multi-billion-dollar imaging game. Now, we announced the contract, which means we are now taking orders for those systems. We expect to sell those. What's interesting is it transitions our neuroscan division from primarily selling the software to the major imaging companies as a gold standard software, that's the Curry software, $30,000 a package to $4 to $6 million installations, a big step out. The other one, of course, is our clinical and consumer, sleep in the cloud and diagnostics, where we have a far more efficient solution for our clients and much more scalable and automated for the shareholders.
Finally, why should an investor consider adding Compumedics to their portfolio?
Well, I think we're a unique company, firstly. We've got solid revenues, profits, growth, and here we have 2 or 3 major step outs in adjunct to that. Interestingly, our long-term debt is $2 million. So we're talking with a company in the region of 30 to 40 million sales, solid profits growth with 2 step outs of the magnitude, one just announced, so these aren't futures, one has already been announced. And we should watch the space for our cloud diagnostics as well as our consumer sleep. The only company in the world that's producing a consumer sleep solution based on validated and true diagnostics that in accordance to the Academies of Sleep and Medicine.
Thank you very much, David, for joining us on Proactive Investors TV.
Pleasure to be here, John.